From 11FS, this is Fintech Insider News, and I'm your host, Kate Moody. Thank you for downloading this podcast, especially you on the bus staring out the window. This week, we're talking FedNow finally launches in the US, a really exciting and long-awaited initiative in the US to try and broaden out access to real-time payments. We've got a local market expert to help us understand the pros and cons of this and what we think it still needs to do to really drive change in the US as a whole. Dame Alison Rose steps down as NatWest CEO. A big story here in the UK about the kind of overlap of politics and finance. We talk about the wider implications and also kind of the legacy of Alison Rose as kind of one of the leading female leaders in the banking industry. And the chicken McNugget is 40 and now available in the metaverse. A lot of very excitable chat about chicken nuggets and all sorts of other fun foods. So we get into all this and much more on today's show. So let's get to it. But first, a few brief messages. Back shortly.
Fintech Insider community, we need your help. The 11FS Awards returns on Wednesday, 15th of November, and we will be celebrating the people and businesses from across the globe who are helping to move the industry forward. This is where you come in. Do not miss your chance to influence who takes home an 11FS Awards trophy, whether they're trying to make the world a better place for their customers, changing the game for businesses, or utilizing AI to improve their customer experience. We want you to tell us who is building the best stuff. Submit your nominations right now at 11fsawards.com. That's 11fsawards.com.
Welcome to episode 765 of Fintech Insider. I'm Kate Moody, Customer Strategy Director at 11FS, and I'm joined this week on Fintech Insider News by some exciting guests to break down this week's biggest stories in fintech and financial services. Firstly, very excited to be joined by my 11FS colleague, Benjamin Ensor, Director of Research and Strategy. How are you, Benjamin? Fresh back from holiday? What apart from holidaying, what's been keeping you busy recently?
Hello, Kate. Yes, I have been away, which is great. Always good to recharge batteries. I thoroughly recommend holidays. I've plunged back into a ton of work we're doing on commercial banking and looking at how sort of digital commercial banking is evolving. We're also doing some really interesting innovation sprints with one of our customers in some totally different areas, which is great because I just love being stretched on very, very different topics and talking to customers because you always learn from talking to people.
Yeah, absolutely. And if you can be stretched whilst also sporting an excellent tan, then that's just a double win. So you're nailing it at the moment. Congrats. We also have a welcome return to Fintech Insider for Janay, Director of Financial Policy at Chamber of Progress. Thanks for joining us, Janay. Can you tell our newer listeners a bit about you and the Chamber of Progress, please?
Yeah, absolutely. Thanks for having me today. My name is Janay. I'm the Director of Financial Policy. I previously worked in the U.S. House of Representatives with Financial Services Committee under Congresswoman Joyce Beatty. Chamber of Progress is a tech policy coalition promoting technology's progressive future in the U.S., and I work on the emerging technology space in financial services, including fintech and crypto.
Awesome. Well, thank you very much for joining us. We're looking forward to getting your take on the news today. And last, but definitely by no means least, we have another return for Olly Betts, Fintech Sector Director at Founders Factory. Welcome back to the show, Olly. Great to have you on. We'll get to your news in a little bit, but can you give our listeners the top line on yourself and Founders Factory, please?
Yeah, sure. Thanks, Kate. It's great to be back on Fintech Insider. It's been a while. I've been on the show before as a fintech founder, but now it's exciting to be back as a fintech investor. For those listening that don't know me, I'm MD of Fintech at Founders Factory, where I help founders build and scale fintech startups. At Founders Factory, we invest in talented founders and diverse founding teams that are building exciting things globally. We've got a current focus on fintech, health, climate, connectivity, and Web3. And we've built and invested in over 300 businesses. We operate in London, Milan, Berlin, New York, Singapore, and Johannesburg. So it's great to be here. Looking forward to it.
Awesome. Great to have you back. And with that, let's get into the news. So our first story we've taken from Reuters, but it's been covered in lots of places. Fed launches long-awaited instant payment service, modernising the system. The US Federal Reserve has launched a long-awaited service which will aim to modernise the country's payment system. The FedNow service, which has been in the works since 2019, will seek to allow everyday Americans to send and receive funds in seconds, 24 hours a day, 7 days a week. This will bring the US in line with countries including the UK, India, Brazil, as well as the European Union, where similar services have existed for years. FedNow is launching with 41 banks and 15 service providers certified to use the service. Janay, obviously great to have you on to help us explore this in more detail. So exciting if FedNow's launched. Does anything feel different straight away with payments? What's changed from day one?
Well, I would say things haven't changed quite yet. I know FedNow just launched this month, and there are just a few banks that are participating, from large banks to smaller banks in the United States. Just to take note, the US has over 4,000 banks, so less than 1% of banks are using this service so far. Another thing is, in order to use FedNow, both of the banks, from the sender and the receiver, have to be participating in FedNow. So it can be tricky if you're sending money from a big bank to a credit union and one is enrolled in FedNow and the other isn't. So I would say it's a little bit of a slow rollout so far, but it definitely has some promise over the next few years.
Yeah, I think that's a really key distinction, both in terms of like the size of the ecosystem, which some of our international listeners, I'm sure, will understandably not have top of mind, but also, as you say, like the dependency on both sides of the payment. So I suppose you've talked about this being like an important first step, but how big of a deal is this within the US context?
Well, I think it's a really big overhaul. I mean, if you think about it, our current payment system, FedWire, is over 100 years old, and automated clearinghouse has only been around since the 60s. So this is like a really big shift in technology when it comes to banking. So very, very exciting for the United States.
Yeah, obviously this has come down from the Fed itself, kind of from the government level. What's been the reaction from the financial services industry itself, from banks and from people within the system?
Well, I would say as an overview, the industry has really embraced FedNow. I know a lot of people have complained about how timely it's been, because it's taken some time for the Federal Reserve to kind of get this product together. But, I think for the most part, industry is very supportive of it. At first, big banks were a little apprehensive about using a real-time payment system, but they've kind of got on board with, some of the other competitors in this space. I know the clearinghouse has their own version of real-time payments that's currently being used. And then you also have a blockchain technology and, a proposed CBDC that would also kind of be not similar to FedNow, but competitors to FedNow. So you've seen a lot more industry leaders embracing FedNow with all of these other competitors in the space.
Yeah, it's definitely a really interesting dynamic to have that mixture of like central government stuff, but also things that have come from the sector itself, from the private sector. Has it been, like, I know whenever there's any kind of debate in the US about sort of stuff that comes from government and stuff that kind of comes from business, it can be a bit sensitive politically. Like, has this been a politically sensitive issue in the States?
I would say like kind of on the fringe. Americans love a good conspiracy theory. I'm just thinking about this week, there was a UFO hearing in the Senate Space Committee. I think like with people who are running for president, there's been some murmurs about how FedNow is like this is a CBDC. I know RFK, Robert F. Kennedy Jr., he's been talking about, how FedNow is a conspiracy. And, you have Ron DeSantis, who's also saying that, he's very anti-CBDC, but FedNow is not a CBDC. CBDC is a currency and FedNow is a payment rail. So they're totally not the same. But yeah, definitely a lot of misinformation for people who are just looking for attention, to me personally, but, they're really looking for voters.
Yeah, no, absolutely. I think when I was Googling this, like doing my own research, I think maybe like the third or fourth search result that came up was like a YouTube video about like FedNow conspiracy. So it kind of makes sense, right? Like as soon as you have anything at this scale, people are going to look to try and elicit those kinds of reactions to it as well. Benjamin, how equivalent is this to the rollout of PSD2 in the EU? Obviously, as Janay said, like, we've got over 4,000 banks in the States. I think it's probably a similar, maybe slightly more than that in the EU, right? But it's a probably at a more similar scale to think about this versus the EU versus an individual country like the UK, for example, in terms of the scale.
I would say it's not at all like the rollout of PSD2 in the European Union for a variety of reasons. Firstly, PSD2 is much, much wider in scope. Secondly, PSD2 is a mandate, right? So PSD2 mandates actions by banks. There is no mandate behind FedNow. Thirdly, PSD2, of course, has been rolled out across 20 plus countries, 27, 28, whereas FedNow is just one country. So it's really much more equivalent to things like the new payments platform in Australia, or maybe arguably elements of UPI in India, or faster payments in the UK, or frankly, what Japan did in 1973. I mean, I think what's interesting here is American exceptionalism. America takes a very different approach to regulation to many other countries. There is a lot less government mandating, a lot more private sector emphasis. But in this particular case, it's taken the United States 50 years longer than Japan to get real-time payments in place. And as Janay actually rightly said, real-time payments already exist in the States because of the RTP system operated by the clearinghouse. So it's not even the first real-time payment systems in the States. So I think this is very dissimilar to PSD2. I think what's interesting here is, to Janay's point, only a few banks are on board. For this system to work, you've got to get lots of the banks on board. So the risk for the United States and the US economy is that unless people can persuade the banks to get on board, nobody can use this system. So, there's a potential tragedy here where, having finally got a system in place, do the banks actually embrace it to actually deliver better experiences to their customers?
Yeah, and I think I saw a survey by, Cornerstone Advisors, which admittedly was with like a relatively small number of banks within like the whole ecosystem, I think about 300, but that was sort of showing that I think less than half of the banks surveyed and around sort of 42% of the credit unions surveyed it was only those types of numbers that were expecting to be able to offer real-time payments by the end of this year. And around a quarter just didn't have a clue at all about when it would be in place. So definitely it's not going to be something that changes the whole system instantly. And I think some of those concerns you raised, Benjamin, are absolutely right. Olly, how important is it to grant startups access to these services too? Because we're talking about banks and community banks and credit unions, but obviously we know that fintechs and startups are a huge part of the ecosystem too in the States.
Yeah, I think it's massively important to achieve adoption. I guess it makes sense to start with the incumbent banks. I think in terms of rollout, they're the ones that are going to have to invest the most in the infrastructure or the kind of configuration to make this work. So it makes sense to start there. And I think we've already been saying actually it's a bit of a catch-up situation for the US really compared to other geographies. So it makes sense to start there and then move towards sort of catching up. But I think to maximize value for the end users and for consumers or corporate use cases, you're going to need to see startups and challengers having access to the new payment rails. So as we've talked about, there's massive differences, or it's not really comparable to PSD2 from a implementation or even policy perspective. But I do think there's some read across or some learnings we could take from PSD2, where the new rails themselves in Europe were sort of just the start of innovation, or the kind of foundational platform that would enable innovation. And it was actually then fintechs, challenger banks, neobanks identifying opportunities to use the new payment rails to create new customer experiences that drove real value. And then it's kind of hopefully then a bit of a kind of self-fulfilling effect of better use case, more value unlocked for consumer, more demand, more usage, more kind of appetite for banks to join to make the kind of unlock all the value of the rail. So I think really the next phase, I guess, for FedNow will be, how do we certify fintechs and neobanks? Because I assume the certification level required for banks is a significant piece of work and quite high. So how do you start to kind of reduce those barriers to enable the wider fintech ecosystem, challenger banks to leverage the rails and then drive innovation that way? So hopefully we'll see kind of a few phases of innovation here. But yeah, the main takeaway for me as a participant in PSD2 was actually the innovation came from fintechs using a new payment method to create better consumer experiences that then kind of make it all worthwhile and then kind of get the volume flowing through the rails. So I think that will have to happen. It makes sense to start here, and I suspect it's the start. Like PSD2, right, we're kind of multiple years into that journey before we start to really see the impact kind of on our everyday lives.
Yeah, no, I think that's a really smart point. Janay, I suppose one thing I couldn't quite work out when I was reading about this was like the commercial structure of this, right? Like how much will this cost banks to use? Like how is this going to be structured like commercially, do you think?
Yeah, so it's not going to be a cost to the consumer because it's a bank it's a banking product, or not a product, a service rather, but banks are going to have to pay. It's free until the end of this year, I want to say, but then starting next year, each bank has to pay $25 a month per routing number that they have affiliated with their bank. So for some banks, banks are businesses too. And so they have to think about, whether or not using this service is, cost efficient. And then, just to speak to, the fintechs also, partnering with banks to use this service or to access this service rather. Fintechs and other neobanks, they really do partner with medium-sized regional banks in the United States. They tend to partner with them the most. And so, just this service is going to be able to enhance the ability for medium-sized banks to compete with the bigger banks that we have that are, already opting into FedNow. But I will note by saying that not all of the big banks in the United States have opted into FedNow as of yet.
Yeah, no, I think definitely, as with many stories that we cover as they break, right? This is just the first stepping stone. But it's been a long time coming. A ton of work has gone into it. So let's keep our fingers crossed that this can help to kind of drive innovation forwards in the States.
Absolutely.
I don't think enough has been done. I think this is going to really struggle because you've got to make it super, super easy for the banks to embrace it. And to the point you were making, Olly, it's got to be open to the fintechs, etc. I don't think there's enough momentum behind this. I think this risks falling flat on its face. Unfortunately, I wish I didn't think that. I think there's a big danger this completely fails. And we've seen new payment systems in other markets fail to take off because it's too difficult for the banks to implement or too difficult for customers to use. I don't think anything like enough work has been done here. So anyway, hopefully I'm wrong.
It's, as you say, it's a really, really difficult system to change. And there's tons of stuff, as you've said, that's already working. So yeah, let's watch this space. Okay. I'm going to move us on to our next story, also a really important story. So this one we've taken from Sky News, but again has been covered in multiple different places here in the UK. NatWest boss Alison Rose resigns over Nigel Farage bank account leak. NatWest chief executive Dame Alison Rose has resigned after admitting to being the source of an inaccurate story about Nigel Farage's bank account. Her 4-year tenure as chief executive at one of the UK's biggest banks has ended after her admission that she had discussed Mr Farage's bank details with a BBC journalist. Dame Alison had come under mounting pressure from the Prime Minister's office, the UK Chancellor and other senior politicians to resign, with the reporters told there were significant concerns over her conduct. 19 bank chiefs were called to attend a Treasury summit after reports that some businesses have had their accounts closed with no explanation. Mr Farage, the former leader of the UK Independence Party and a Brexiteer, reported in early July that his Coutts account had been closed and said he'd not been given a reason. The BBC reported that it was closed because he no longer met the wealth threshold for the private bank, citing a source familiar with the matter. It has since apologised for its inaccurate report. Benjamin, this is a huge story for the UK financial services sector. I mean, rights or wrongs with the BBC leak aside, what is Alison Rose's legacy as the NatWest chief executive?
Do you know, I actually don't think it is a huge story for the UK financial services sector. I think it's a political story. I don't really see the fintech angle necessarily. I think it was a huge story when Alison was appointed in 2019. 40 years after the UK got its first female prime minister, we got our first female chief executive of a major bank. That was huge, right? 40 years. It took 40 years to get from a female prime minister to a female chief executive. That was huge. So I think her departure is just sad. It's a real shame. She made a mistake. You can't breach client confidentiality. She's made a mistake. She's had to, fall on her sword or whatever. I think that's a shame. To your point, Kate, about sort of her legacy, I think Alison Rose was doing a fantastic job championing for women in senior positions. She was doing a fantastic job championing for sustainability and for a whole bunch of other, well-needed initiatives. I think she was a very competent, retail-focused chief executive, providing a role model for lots of younger women in banking and indeed, younger men too. So I think it's incredibly sad. And I also think it's a political distraction. We've got large parts of the Northern Hemisphere burning, on fire from climate change. We've got Russia blocking the export of grain from Ukraine, which is going to lead to millions of people starving around the world. And we're discussing one rich man having his bank account closed. I think it's really sad. So I think Alison was great. I think it's very, very sad.
Yeah, no, absolutely. It has definitely spiraled in the media, and I guess depending on your views, you can hypothesize as to why that is. I suppose, undoubtedly it is a big change both for NatWest and Coutts, right? As we're talking about this today, it's also emerged that the Coutts chief executive has resigned. So this is having a big a big fallout in the UK space. Where do you think NatWest and Coutts go from here, Benjamin, regardless of like whether it's a story that justifies a media hype or not? Like, it's still a big change for those two organizations, right?
It's always unsettling for businesses when you lose leaders. NatWest, which was formerly known as Royal Bank of Scotland, had some very difficult leadership in the past that had taken the business in a very bad direction. I think the business has been working really, really hard to recover from that. Alison Rose was a big part of that. So it's hugely disruptive. I mean, this is extremely unfortunate for NatWest. There's so many great people in NatWest trying to do great work for their customers. This is a big setback. It's a huge shame that she got forced to resign for political reasons. She breached client confidentiality. You can't do that. It's a great shame that she had to resign because it will set NatWest back.
Yeah, no, absolutely. Janay, obviously, we've talked about Alison Rose's role in the UK system, being the first female chief executive of one of the UK's big four banks. How does that representation picture look in the US?
Yeah, I mean, we have a lot of women that are, really killing it when it comes to, leading banks, thinking about, American bankers. They do a profile every year on, the most powerful women in banking. And there's, every year I see women who are president and CEO of banks. They may not be the Wells Fargos of the world, but they, they're holding their own in their regions. They're really doing the work. Just thinking about this story, it reminds me of the whole situation with JP Morgan Chase and Kanye. When JP Morgan Chase, closed Kanye's accounts. And even though, Jamie Dimon didn't comment on, why, and he didn't, share, information about Kanye's personal accounts, I think one thing that really stood out to me during that whole situation was how JP Morgan Chase said that successful partnerships are rooted in mutual respect and shared values. So if a bank doesn't really see that, they want to continue business with somebody as they see fit, that's totally, I feel like it's definitely their right to terminate that relationship, but to disclose information about someone's personal account, obviously violating that client confidentiality is not okay. But when it comes to, women in this space, actually most women that are in banking, leadership, like executives, they're definitely leading credit unions. There was a recent study from the Credit Union National Association that said that 51% of credit unions have female CEOs. So women are really leading, and they're setting legacies in this space. Definitely not a setback to see her leave, obviously for the reasons that she violated client confidentiality. But I feel like with having more women in this space as executives and C-suite leaders, I think there's definitely a lot more room to grow. And I feel like our leading banks have done a lot with retention and recruitment and mentorship with women that are interested in going that route in banking.
Yeah, no, I mean, I know quite a few people who work at Citi in the US, and I've heard lots of positive things about the work that Jane Fraser is doing, in particular at Citi. So, as you said, really great to kind of spotlight the role that these women are playing in driving the industry forward. I suppose from my perspective, I think the fact that Alison is departing in the same year that Anne Boden is stepping down from Starling, just like the combination of the two feels like a really, really tragic situation, like to have two women that were holding those positions of leadership and by most accounts doing really great things and creating kind of really powerful change within their organizations. I think it's a massive loss. As a woman working financial services, it was really inspirational just to me personally to kind of see what they were both doing. Alison Rose in particular, she was a chief executive. She was also a mum. I think there are these things that sometimes people don't appreciate, to kind of know that you can be juggling multiple different things and still strive to kind of keep progressing.
You can do it all.
Yeah. I mean, maybe you can't do it all the time, but you can certainly kind of try your best and kind of push forwards. Olly, I'm sure and I know that you guys at Founders Factory do a lot to support female founders and business leaders. Do you think representation in these levels is a factor to them? Does it matter?
Yeah, I think it's massively important. Yeah, we do a lot. Founders Factory are really committed to supporting female founders. Half of our investments are in female founders. I think that representation at the top level is hugely important. We all need inspiration. Benjamin mentioned role models. Alison really was a role model for lots of people. I'm really lucky. One of the key corporate partners that I work very closely with at Founders Factory is Aviva, and so I'm fortunate enough to work with Amanda there, who's a real inspiration to lots of founders, female and more generally. So I think it's just massively important. I think we know we need to continue working on this. It's always probably been specifically difficult in fintech to get that representation at leadership level, but also in founders. I mean, a lot of the work we do, and the reason we do it is because we believe if we can focus on supporting female founders at the very early stages of their business, which is where we invest and where we build, then we can start to improve representation there, which then we're sort of the start of the funnel through to later stage VC funding. And then as those companies scale up, I think you have to sort of obviously be working across this at every stage. But yeah, we're really passionate about supporting female founders in those very first days of their business. And then hopefully we can increase the number of female founders that are then put in front of VCs for further funding, increase the chances they scale and inspire other people. So I think it's really a shame and quite sad, as Benjamin said, for political reasons, that Alison's had to step down. And as you highlighted with Anne as well, then we're kind of losing role models, but we need some more, and there's so many out there. So hopefully there'll be more good news to share soon as people step up, because it is just so important.
Yeah, fingers crossed.
Well said.
Yeah, I mean, Benjamin, obviously Nigel Farage is trying to make this kind of like a political issue, as you said. They're trying to make it a kind of culture wars, woke thing. But I mean, if you park that, there's still this underlying question of, should banks retain the right to close the accounts? As Janay said, like this has happened in the States. Do banks have the right to close people's accounts if you don't align with their views?
So there was a very interesting US Supreme Court decision at the end of June, which is called 303 Creative versus Elenis, which essentially said that it is okay for businesses in the United States to discriminate against people if the owners of that business don't agree with the beliefs of the customer. I think this in particular one was about a sort of wedding or something of two people of the same gender. But so you've got an interesting distinction here between what's going on in the States, where the Supreme Court is saying actually it is okay for businesses to discriminate, and the UK, where the government is coming in and saying, you can't discriminate. I think the challenge for banks is that certain politically exposed persons, like sort of Nigel Farage or whoever, are potentially people who might get bribed. They are, politically exposed. We have seen a number of instances in many countries around the world where people, particularly on the sort of extreme left or extreme right, are maybe more prone to taking donations from foreign governments or foreign sponsors and so on. And so that does actually create a lot more headaches for banks, that there's a lot more sanctions monitoring work they've got to do. There's a lot more money laundering, etc., because some of these politicians, particularly the sort of more extreme politicians, are sometimes, and I'm not suggesting that Nigel Farage has done this, but it is more complicated when you have someone political. It does create work for banks because banks have to comply with sanctions monitoring, anti-money laundering, know your customer, etc. So there is more work involved in it. But I do actually agree with the position that you shouldn't discriminate against customers based on their political beliefs. Nigel Farage is, not a terrorist. He's never suggested killing anyone or anything like that. So to discriminate against him purely because you don't like his views is, I think, not really justified.
Yeah, I mean, it's a really interesting question for Coutts in particular. And again, for, our non-UK listeners, like Coutts isn't like a main high street bank, right? Like it's a bank that is focused on serving like the affluent. So they're already sort of discriminatory by nature, right? In that you have to hold a certain amount of money for them to even consider you as a customer. So I do think it's a really interesting. I feel like there should there definitely is like the right to be banked at a kind of wider level, and the right for you to have access to financial services. But we already have permission for people to exclude on the basis of wealth. So I really struggle to kind of see it in that kind of black and white sense when it comes to these more niche banks, the banks that focus on just very specific subsets of customers. But we're seeing, Coutts go in for a lot of change as well, like their chief executive is changing. So it'll be interesting to see how they emerge from this and if they kind of have to reposition themselves in terms of the exclusivity that they have in the market generally. Anyway, I'm sure we could talk about this for the entire show, but we've got other stories to cover as well. So we're just going to take a quick pause here, but we'll be back very shortly.
200 trillion. No, that's not the number of times we've heard the letters AI this year. That's the estimated dollar value of residential property worldwide. The opportunity is massive and the space is ripe for disruption. So why does financial services keep getting mortgage offerings so wrong? Digitizing outdated processes has only led to complex, opaque, and exhausting user journeys that make the prospect of buying a home even scarier. The answer to this problem? Understand your customers' jobs to be done and meet them at their pain points with embedded, truly digital solutions. Partner with businesses to simplify and accelerate the home buying process. That's where the future is. Ready to take the first step? Visit 11fs.com/ventures and let's get to work.
Welcome back. Before we get on to the second half of today's news, a reminder to check out the latest episode of our Fintech Insider Insight Show. In our most recent episode, we're asking, how does the UK avoid a mortgage market meltdown? David Breer is joined by guests from the Mortgage Advice Bureau, Sprive and Digital Cat Consultancy to look at the current turmoil in the UK mortgage market, the potential solutions and what the next 6 months look like. You can find that podcast wherever you got this one. Let's get back into the news. We've taken this one from City AM. Italian banking giant Mediobanca backs London with a £10.4 million investment in startups. One of Italy's largest investment banks, Mediobanca, has committed €12 million or £10.4 million to a joint venture with early stage investor Founders Factory to help scale fintech startups. The joint venture will build and invest in 35 fintech businesses over the next 5 years. Mediobanca's investment will help underpin a new fintech venture studio accelerator enabling innovation in financial services by supporting international fintech startups. Its focus will be on ventures that use advanced technologies such as blockchain and AI to innovate in the financial services market. Olly, thanks for popping in to chat about this one with us. Really appreciate it. How did this relationship with Mediobanca come about? Who approached who? Sounds a bit like a dating story, but not.
Right, look, I guess we're always looking to expand the Founders Factory. So the number of corporate partners we're working with, and ultimately the goal is how do we build as many and fund as many exciting and incredible startups as we can. So we're always talking to the world's largest companies and exploring the role they can play in the startup ecosystem. And so this partnership came out of one of those discussions with Mediobanca. We've been doing a lot of more work internationally recently, in Milan, obviously, with Mediobanca and Fastweb, a big telco provider in Italy, but also in Berlin, Singapore. And for those that we were talking in the break about suntans, those that like exotic locations, we have a partnership actually in the Bahamas specifically focused on ocean and coastal health, which is really exciting. But our experience of building these partnerships is really that the most value comes from building network within the markets which our corporate partners operate in to provide unfair advantage for the startups that we then build or invest in. So with this, it made logical sense when we were talking to Mediobanca. We already have fintech focused in the UK at the moment. We build a lot of businesses with Aviva. We also have a partnership with Standard Bank in Africa. So there was a kind of wider fintech network we could build, but also we have an existing corporate partner in Italy out of Milan. So it made sense to expand within Italy as well. And so the City AM, brilliant to get some coverage, but I think the lead on Mediobanca backing London is probably not really aligned to strategically what we're doing here. It's really about investing in the Italian ecosystem and to take that ecosystem up to the next level by funding and providing support to more and more startups and bringing Mediobanca in with their network and existing kind of incumbent influence that they have in the market to bring unfair advantage to startups beyond just capital. So yeah, really excited to get started with Mediobanca. They're a company with loads of history and a lot that they want to do and a lot they want to change within Italy. So we're looking forward to that.
Yeah, I think I feel like I'm hearing lots of conversations about Italy at the moment. Like it definitely feels like a market that's a lot more under the spotlight than it has been in recent years. So a good time to be exploring that space for sure. We mentioned obviously in the lead into the story, you know, you've come out and said that blockchain and AI will be focuses. I mean, first is kind of like massive like buzzword bingo scores for listeners, but you know, what makes a startup an attractive prospect in that space? Like there must be a lot of very excitable descriptions, right? But how do you actually identify the ones that are truly exciting?
Yeah, it's a great question. I mean, we've got to start somewhere, so that's probably why not start with blockchain and AI. It's kind of an anchor point, I guess. But ultimately, we're always looking for opportunities to work with and invest in startups that are building the future. So in this case, and with Mediobanca, looking for disruptive fintechs focused on consumer lending, wealth management and investment banking, which are the main areas that Mediobanca kind of have built their capability and have a huge right to win. But ultimately, we're very founder-focused at Founders Factory and with our partners. So we invest in founders who share our point of view on the future or vision for the future or emerging technologies we think will be disruptive and change the world. But ultimately, we look for founders who are tackling a massive problem felt very acutely by lots of people, and where they have some unique, I guess the two things I always look for is a unique product insight, so a unique perspective on how to solve that problem, and then a unique market insight into how you're going to distribute and scale. And so, yes, blockchain and AI, we think are still massive opportunities and enabling technologies, but we're ultimately looking for founders who are building really exciting things and have an exciting point of view on what the world's going to look like in the future.
Yeah, no, I love that that kind of two-lens approach. I think quite often people forget about like the distribution point and just get very excited about the idea. But no, I think that's really key to spotlight. Janay, obviously, we're talking about startup accelerators here, or kind of investing in kind of founders. You know, what is the health of that space in the US? So what does startup accelerators in the US look like right now?
Well, I know that it was severely impacted by the collapse of Silicon Valley Bank. And I know that, Y Combinator, even though they said that they weren't affected by this collapse, they've kind of pivoted towards, just kind of, early stage startups, which tend to be, cheaper and have a little bit more room to expand compared to late stage funding, which I know that they had been doing in the past. But, I think that, with this, like you have, tech, they're following the tech industry where there's a lot of layoffs and there's a lot of focus on what they're great at. And I know that accelerators like Y Combinator, they've been really good at picking startups that can really go the distance. And so it makes sense for them to kind of regroup and focus back on what they've been doing so well. What their secret sauce is, that's been keeping them going.
Yeah, no, I think that's really interesting. Benjamin, obviously, when we look at Mediobanca itself, like, were you surprised by this? Like, was it something you were expecting them to do?
I mean, I don't suppose I spent lots of time sitting around thinking, what's Mediobanca going to do next? But it's not at all surprising. Remember, Mediobanca, for people who don't know it, is the bank that backs CheBanca, which is one of Italy's most successful digital banks. That was launched back as far back as 2008 and has roughly 1 million customers. So, Mediobanca is not a sort of sleepy Milanese merchant bank. It's absolutely tightly connected to particularly Italy's, thriving financial ecosystem. It sits at the heart of Italian finance. It's a very well-respected organization that gets digital at some level, right? So I don't think this is surprising at all. I think it's a very interesting move. Mediobanca is a very, very smart investment bank. And what are investment banks meant to do? It's kind of in the name. They're meant to invest in businesses. So I think this is a very logical move. I think it's a very smart move. And, Olly, I think fantastic. Well done. I think this is really exciting.
Yeah. What markets are you also excited about, Olly, outside of Europe? Obviously, you mentioned the Bahamas already. Like, what else is on the radar from your perspective?
I guess markets that are interesting, there's a part of Founders Factory that we built a joint venture in Africa going back quite a few years now. Founders Factory Africa is scaling really well. They've received a lot of funding from MasterCard very recently to help kind of supercharge that. We still think that market is very, very interesting, both from a fintech perspective, but also from quite a few other kind of opportunities and sectors. Amazing kind of entrepreneurial talent base there. And then actually, if you can combine that with corporate scale for distribution and capital, I think there's still a massive opportunity in that market. It's complicated, lots of different kind of nuances by different countries within the continent, but a really big opportunity. And then I think the other area we're looking at actually is kind of forget the borders and forget the kind of, whilst we need to build some kind of presence locally to create networks, actually kind of what are the opportunities to really be more distributed. We as a team at Founders Factory are increasingly distributed. I still think we're really excited by and investing in businesses where they're kind of distributed from how they scale the business and the markets they operate in from day one. So kind of global day one, especially in fintech, that excites me. There's a long way to go. There's so many challenges from a regulatory perspective and actually some of the technologies required. But I guess if you start to really go for buzzword bingo and kind of combine fully distributed or decentralized with blockchain and AI, it still feels like there's just a huge opportunity within fintech to go kind of much more borderless and just kind of your customers being in different places and all over the world from day one and building a community or customer base in a different way. That's probably one of the areas that excites me the most. And I think it's getting closer to being possible, both from a technology perspective and consumer demand perspective, that we might see a like borderless neobank or fintech within the next kind of 5 years or so.
Buzzword, bingo, a go, absolutely. But massive congrats on the joint venture, and looking forward to seeing what the partnership unlocks. So yeah, congrats again. Okay, moving on to our next story. This one we've taken from BBC News, and that is Worldcoin. Sam Altman launches eyeball scanning crypto coin. A cryptocurrency project described as dystopian has been launched by AI entrepreneur Sam Altman. Worldcoin gives people digital coins in exchange for a scan of their eyeballs. On day one of the project's full launch, thousands of people queued to gaze into silver orbs in sites across the world. Altman, the chief executive at OpenAI, which built chatbot ChatGPT, says he hopes the initiative will help confirm if someone is a human or a robot. Worldcoin also claims that its system could pave the way for an AI-funded universal basic income, but it's not quite clear how. Since testing of the scanners began 2 years ago, Worldcoin says more than 2 million people have been added to the crypto database in 33 different countries. We asked you, the listeners, on 11FS LinkedIn, would you let Worldcoin scan your face for $50 with more than 200 votes? 20% said yes, show me the money. Oh, that was a very poor Tom Cruise impression, apologies. 80% said no. Would our panel take $50 for a face scan, Benjamin?
Absolutely not. I mean, firstly, I can't imagine anyone being interested in my face. But no, I think opticians should be the people focusing on eyeball scanning. I think where I'm coming from on this is when you said eyeball scanning crypto coin, I almost heard you say eyeball scamming crypto coin. I think we've seen a lot of idealistic and well-intentioned crypto-based things. And I think what exactly is the purpose behind this? What's the real need? Who does this really help? I think people are becoming skeptical of what exactly is this? Who benefits from this? Why is this needed? What problem does this solve? So for me, no. I suppose the other thing is, and obviously this is a generational thing a little bit, but have we really understood the danger of continuous monitoring and AI and, the dangers of how that information might get misused by bad governments? Certainly frightens me.
Yeah, no, for sure. It's. I think we used the word dystopian right in the intro, and it feels definitely in that realm. Olly, what's your take on?
I think it depends what day or time of the day you'd ask me. I think when I read the notes before, I was like, yeah, $50. I wouldn't take $50 of Worldcoin, but I'd take 50 US sterling dollars, because I think loads of people have probably got my face. Now, retina scan, probably slightly different. Face scan, yeah. I mean, the number of CCTV cameras that I walk past every day kind of thing, everyone's got my face anyway. I don't know. This feels to me like it's a bit of a conflict between sort of the kind of core piece of kind of creating cryptocurrencies of being kind of decentralized and getting out, breaking free of a kind of centralized system. And then they're using data to kind of monitor and centralize everything. So I guess the vision here is kind of, we have every face on the planet, so we can kind of make sure you're a human, not a robot. That feels very centralized. So I think it's a bit confused, and that will definitely lead to a struggle for adoption, kind of the kind of, positive vision, I guess, of the decentralization of finance and banking and kind of improving access. But sort of the only way you can achieve it is that we centrally store everyone's face. It feels in conflict. And I think, therefore, is it a gimmick to get kind of the flywheel started on Worldcoin? Maybe. I guess I'm kind of suitably skeptical. But again, I might change my mind later.
Well, we'll come back to you later to see if you change your mind. Janay, I suppose, give you your take as well. Are you excited by this? Do you think this could take on Bitcoin in terms?
I agree with Olly. I'm not entirely sure about Worldcoin taking over Bitcoin in the case of prevalence. I think the major factor of Worldcoin right now is just for them to build trust with consumers about where their biometric information is going. Because, at first, if somebody is scanning my eyeball, I'm thinking, okay, well, what is going on with this data? Where is this going? If I'm not familiar with the company, then I may not be really interested in, even having them have my biometric data. And Bitcoin wasn't necessarily asking people for their eyeball scans when they first came out. Let's just be honest. Reading about Worldcoin and its promises, I know like they've said, things about potentially having universal basic income. The use cases are interesting, but there are so many tokens in the market right now that, advertise the ability to do some of the same things as what Worldcoin is saying that they can do. So I feel like it might be a little difficult for Worldcoin to, have that dominance that it's looking for.
Benjamin, are you excited about universal basic income?
I think this whole thing is just a bit bizarre because what private organization is going to be providing a universal basic income? How does that even happen? I think, if FTX and Sam Bankman-Fried taught us anything, it's to be a bit wary of visionary idealists. So, I'm not saying anything bad about Sam Altman here, but I think people need to be a little bit skeptical about like, what exactly is this? Who benefits from this? Because we do need things like standard digital identity. I'm not sure that Worldcoin is the solution, and I'm not sure that a privately operated scheme is the way forward. And I certainly can't see governments being enthusiastic about something like this. So I think this is going nowhere, but I'll probably be totally wrong.
Good thing about recording this is we can come back and prove it in a couple of years' time maybe. But Olly, obviously you mentioned in the previous story you guys are focusing on AI as an area where you kind of want to back good innovation. As we're talking about here, there's still a lot of fear and anxiety, right? So how do you balance the fear with the innovation?
Yeah, I think it's an area I'm really excited about, actually. I think there's loads of opportunity in the kind of second order effects of AI innovation. So I'll let Sam Altman figure out kind of where ChatGPT goes next for kind of AI in automating tasks so that we all don't have to do any work. But I think there's like second order effects are super interesting. So we recently invested in a startup called Calvin Risk. They help corporates ensure that their AI models haven't gone rogue. I think that's kind of really interesting. And then I'm looking at the moment trying to engage and find founders who are interested in building insurance products for when AI goes wrong. How might you make an insurance claim because something went wrong with AI or a bad decision was made or an accident happened? And then I think there's another idea that I've been kicking around with a few people that I think is interesting around how you might enable banks to verify AI agents. So like in the future, let's say I outsource my day-to-day financial management to an AI assistant that just books all my travel and pays for everything and pays all my bills. How might banks, what are the opportunities to develop infrastructure startups, let's say, to help banks verify that the AI agent that's saying move money from Olly's account to Olly's other account is actually authorized to act on Olly's behalf and isn't someone else's AI agent that's kind of impersonating the other one. So I think it gets fascinating on there quite rightly needs to be skepticism, and a lot of fear about AI, but it might present lots of other opportunities for startups to solve those problems, mitigate the risk of bad outcomes, or maybe even transfer the risk in the insurance context of bad outcomes. So yeah, there's like a whole untapped second set of opportunity, I think, that comes, which excites me, but with a suitable level of kind of fear that can we develop those capabilities fast enough to react to kind of potentially the downsides of kind of just rapid AI kind of progress.
Yeah. And I guess, Janay, like we've seen the US regulator, I suppose, sit more on that fear side right at the moment. So, they're not, despite the fact that it's got an American base or American founder, these coins aren't being offered to US citizens. So where do you think that stands the US in terms of its approach? Do you think other markets will follow the US, or is the US kind of going to be an outlier?
Well, I know that WorldCoin is they're still trying to educate people, regulators as well as Congress people, senators about, the mission and what they're doing and how all of this works out. I know that there's a lot of sentiment towards digital assets as a whole right now in Congress. People are just kind of in two different camps on this issue. I think adding biometrics into it is just going to confuse a lot of people on Capitol Hill. So I think that, it will take some time for the US to kind of embrace this concept. It's taking some time for them to embrace digital assets still. I know that WorldCoin, they are working with other countries. They just recently, I think Germany is working with them to have this product available in their country. So they're working with other countries outside of the United States, but the U.S. is always slow. Things take a lot of time. So the U.S. may likely be the last country to adopt this if it catches on, around the rest of the world.
Yeah, let's wait and see. Okay, now for the section of the show called Big Click Energy, a quick fire roundup of some of the more click-worthy news this week. Benjamin, what have you got for us this week?
So we have a story from Engadget, which is that Twitter's CEO is teasing banking and payments plans in a memo about an X rebrand, or the X rebrand. So Twitter's rebrand to X is officially underway, and CEO Linda Yaccarino has offered some new clues about what it may mean for the company. In a memo reported by CNBC, Yaccarino suggested that payments and banking features could feature prominently in Elon Musk's new vision. She wrote, "We'll continue to delight our entire community with new experiences in audio, video, messaging, payments, banking, creating a global marketplace for ideas, goods, services, and opportunities." It's long been rumoured that Musk is keen to bring back features to Twitter. Musk is bullish on X's potential and has claimed that the payment integration could become half of the global financial system, or some big number. However, full details of how this might work in practice remain thin on the ground. So this is an interesting story. Those of you who've been around for a long time or know your fintech history will know that Elon Musk was originally the founder of a business called X.com, which merged with a company owned by Peter Thiel, which owned PayPal. And Musk wanted to get PayPal renamed as X.com, which apparently went down badly in market testing because most people associated an X with pornography rather than a friendly payment service. However, he's obviously continues to love the brand, and so there's an element of him trying to sort of do what he was trying to do 23 years ago, but also the fabulous success of super apps elsewhere in the world, notably in across much of Asia, has obviously been part of his strategy in acquiring Twitter and part of his logic. So it's unsurprising to hear Twitter talking about payments because that's clearly been part of Musk's strategy pretty much from the outset of when he decided to buy Twitter. This isn't just about political ambitions. It's about, can we use Twitter as can we turn Twitter into an American super app and challenge Cash App or PayPal or anyone else who might try and get into that position?
We've managed to get super app in as well. Blimey, buzzwords are just absolutely off the chart today. Top job, team. Okay, now it's time for the and finally section of the show, a look at something offbeat or lighthearted from the news this week. We've taken this story from CoinDesk, and that is McDonald's opens McNuggets Land in the metaverse. But McWhy? McDonald's is celebrating the 40th anniversary of Chicken McNuggets by opening McNuggets Land in the metaverse platform for Sandbox. Joining the land of McNuggets, you are greeted with pixelated McNugget characters such as Coach McNugget and his assistant, creatively named Assistant Coach McNugget. By playing the game, players can earn rewards including a 100,000 sand shared prize pool, that's the native cryptocurrency of the Sandbox, worth roughly $44,000 apparently, and mystery boxes, according to a press release. The experience is spearheaded by the Hong Kong arm of McDonald's, and Hong Kong users have the chance to win coupons as well as the big prize, 365-day free chicken McNuggets. Benjamin, obviously I've profiled you as a massive McNuggets fan. I'm going to come to you first. How excited are you by this?
On a scale of 0 to 10, probably somewhere close to 0. But I'm the McWrong person because I'm not a big McNugget fan. I suppose your serious question is, does this make any sense? I mean, if you've got people who love your brand in the metaverse, fantastic. But if you haven't, it's just a big waste of money.
I'm finding this whole episode really hard because we start off with FedNow, which, even though it's obviously a very serious initiative, just makes me think about food. And now we're talking about chicken nuggets. I'm just really struggling. I feel like my stomach is going to rumble audibly before we get to the end of this. Janay, is it just me? Are you excited to go to McNugget Land?
So I am a McNugget fan. I don't know about you, Benjamin, but I love them so much. I've loved them for a long time, but this is not enticing me to want to go into the Sandbox and buy an NFT of a McNugget. I prefer eating my McNuggets in person, not in the metaverse.
Yeah, I'm wondering, I don't know if Coach is Coach McNugget actually a actually a chicken nugget, like with legs or something, or is it like a person? Because I feel like if I was in a McNugget metaverse just looking at lots of nuggets dancing around me, I would just be even hungrier and even more frustrated. I've been informed by the producers that he is a nugget. So yeah, this is just confirmed. I'm not going into this metaverse just to be taunted by nuggets that I can't eat, because I agree, I'm also a nugget fan. Olly, are you considering going into the metaverse with or without nuggets?
I'm definitely a nugget fan for sure, lifetime nugget fan. So I'm with you there. But I think I've got even less willpower. Like if I saw the golden arches in the metaverse, if I'm in some kind of game or I'm in some kind of metaverse environment, I see that I'm just going to get hungry. And I haven't yet seen a solution for hunger that's not like a real life solution. So maybe if someone can create a hunger kind of some way of solving the hunger problem digitally within the metaverse, it kind of, I'm there. But otherwise, I'm just going to see the golden arches and then log off or exit. I'm showing my lack of metaverse usage. Leave the metaverse into the real world to be hungry and try and kind of serve that hunger. So it's going to sell more. I'm going to buy more McNuggets if I was in the metaverse and I saw it, but I'm not going to stay in the metaverse.
Olly,
maybe it does work.
Can I suggest that you switch your attention at Founders Factory from fintech to 3D printing, and maybe you can drive some advances in 3D printing. So as well as printing plastics and resins, 3D printers can start printing liquefied chicken.
That's a good idea. I mean, maybe I could actually have the McNuggets like at my desk at that point in time. But we're investing so much time and money at Founders Factory to try and solve kind of health problems that I'm massively conflicted on the McNugget.
They're very high nutritional value
consumption.
Yes,
it's a difficult balancing act. Okay, question to round us off. Benjamin, I'll come to you first because I suspect the answer is not nuggets. But if you could win a year's supply of food from any brand, what would it be, Benjamin?
Well, I was thinking of something like HelloFresh, which provides sort of recipe boxes in the UK.
That's far too holier than thou.
It's
not fun.
Well, the thing is, I get teased in the office because I eat a lot of fresh fruit, and so I would actually want food from my local farm shop because I'm lucky enough to live in the countryside. So actually, that's actually what I want. I'm sorry.
I think you're now banned from this show. You're not allowed back. Olly, what about you?
Brand, you said, didn't you? So I'll probably have to go with Walker's, kind of one of the biggest. I'm just a crisp person. I just can't go like really a day without a bag of crisps. It's my go-to snack. So lifetime supply of Walker's. I guess if I can have that macro brand, then I get loads of choice.
Yeah, I like it.
I'd be very happy with that.
Strategic move. I respect that. Janay, what about you?
Pizza, of course.
You've got to pick a brand there. That was it. You've got a specific type of pizza, right? So, because that's quite difficult because there's so many different types of pizza. Like, just pick
so
one
many
brand.
Different types. I don't know what you guys have in the UK.
Oh no, we have a global audience.
You guys have everything.
You can pick an American brand.
I would pick Giordano's, based out of Chicago. So good. It's like a pizza.
Is it one of
cake.
those like really deep bad boys? Okay.
Really deep.
Oh, okay.
Yeah. Super
I'm
deep
gonna
dish.
Google it now.
They're so tasty.
I think if there's anyone from Mediobanca listening, they will be absolutely disgusted by the suggestion of a deep pan pizza.
Sorry, Italians.
So I'm just representing Italians to say, disagree politely.
Smart. I think unsurprisingly to anyone who probably works at 11FS, I think my brand would probably be Nando's. I am
so good.
I'm a big Nando's fan. Yeah, and isn't all chicken. They do other things. I mean, I'm not advertising Nando's here, obviously. I mean, I kind of am, I suppose. But big Nando's fan. In my pre-fintech career, I did actually do some customer research work for Nando's, and I just went on so aggressively about how big a fan I was of Nando's that the client I was working for gave me a Nando's voucher for my birthday. I think for £100. Which actually anyone who's been to Nando's will know that that's actually quite a lot of money to spend in Nando's. It's actually quite hard to spend that much money in Nando's. And I suspect they'd imagined...
Did you have to do it in one sitting?
Well, no.
Or could you spend it over multiple sittings?
That's probably it, right? I suspect the idea was that it was meant to be multiple things, but I just went and had a massive meal with my husband. So it was actually quite traumatic to have that much Nando's in one. in one meal. But anyhow, so I think that's probably enough for today. That comes to the end of the show. Thank you so much to today's guests. Where can people find out a bit more about you, Benjamin?
Well, in the unlikely event that somebody actually wants to know more about me, you can find me on Benjamin Ensor on LinkedIn, but you can find out more about the work that we do as a team at 11fs.com.
Awesome. Janay, what about you?
You can find me on X at Janay, and my organization is progresschamber.org.
Awesome. Go check it out. And Olly, what about you?
Yeah, people can find me on LinkedIn, Olly Betts, on X, Betts Olly. And if you want to meet in real life, we're at 180 Strand in London. You can always drop by, meet some of our founders, meet some of the team, and share your ideas.
And by the sounds, it brings some nuggets, so that will get you in the door for sure.
Absolutely.
And as for me, I'm on LinkedIn, Kate Moody on LinkedIn, or you can drop me an email, kate@11fs.com, especially if you work for Nando's and have out, just give me. So please do. Thank you so much for listening. You can join the conversation on social media or email podcast at 11fs.com. Thanks very much. Goodbye.